Hey everyone, welcome back to Corporate Decoder. Today, we're diving into River Financial Corporation's annual report. Think of it as peeking behind the curtain at a community bank making some interesting moves. We'll uncover if this is a bank ready to ride the river to success, or if it's about to hit some rapids. River Financial is based out of Alabama. It's been around since 2006, but became subject to the reporting requirements as a public filer around 2015. This report covers the year ending in December of 2024. It's got all the usual stuff, numbers, risks, legal talk, the whole nine yards. So right off the bat, it's important to know there is no public market for River Financial's common stock. It's privately traded, so it's not easy to get in on this, but they do give an estimate on the price. The report notes that as of June of 2024, the aggregate market value of voting common stock held by non-affiliates was around $176.5 million. Now, a friendly warning, this report is full of what they call forward-looking statements. Basically, they're making guesses about the future, so don't take everything as gospel. River Bank and Trust has 23 branches and one loan production office across Alabama. This is across 6 regions in the state, and they are designated as River, East Alabama, Coastal, Wiregrass, North Alabama, and Birmingham. The bank emphasizes getting deposits first with a pursuit of checking accounts and a conservative approach to lending. Deposits are a lifeblood of a bank, and River seems to be doing well on that front. The total deposits of the bank is around $3.07 billion. On the other side of the operation, let's talk about lending. River offers a range of lending services, including real estate, consumer, and commercial loans. As of December 31, 2024, their total loans were approximately $2.49 billion, which is 69.4% of their assets. The bread and butter of any bank, about 76% of this is real estate loans. They also make some unsecured commercial loans, and those can be a bit riskier. They try to make sure loans are underwritten properly to limit loan-to-value ratio. This is the fun part. Every bank has to play by a complex set of rules from both the feds and the state. If they don't, they get in trouble. This part of the report dives into all of that. Because River Financial is a bank holding company, it's regulated by the Federal Reserve or the Fed. They need to get the Fed's approval before making big moves like buying another bank. River Bank and Trust itself is regulated by the FDIC and the Alabama Banking Department. That means they have to play by the rules about things like how much they can lend and what kind of investments they can make. Here's where things get interesting. On February 21, 2024, River Bank entered into a consent order with the FDIC and the Alabama State Banking Department. It's a regulatory slap on the wrist because the bank had to enhance its oversight of its anti-money laundering and countering the financing of terrorism program. This requires a risk assessment and training programs to make sure the bank can catch suspicious activities. They are improving their training for all employees and directors. Also, the board of directors appointed a directors committee to oversee adherence to the bank's compliance. All that said, it is important to know there has not been losses to the bank due to these activities. As a good report, River Financial explains all the things that could go wrong, what they call risk factors. One big one is their concentration in Alabama. If Alabama's economy tanks, River Financial is going to feel it. Another biggie is interest rate risk. Banks make money on the difference between what they charge for loans and what they pay on deposits, and if rates go up or down too quickly, it can hurt their profits. Real estate loans make up a large amount of their business. If real estate values fall, a lot of loans could turn bad. Because most of their real estate loans are also in Alabama, this adds to that risk. They say their stock isn't actively traded, so that might make it hard to sell if you wanted to. The financial world and market in general is always something to keep an eye on. As they say, bad economies make for bad loans. The report also discusses specific risk factors like the USA Patriot Act and the changing regulatory landscape. Let's look at the financials. I'm going to pull a few key figures. Their net income was $31.3 million in 2024, up from $26.7 million the year before. The effective tax rate for the year 2024 was 23.8%. Total assets went from $3.23 billion to $3.58 billion, so things are growing. It appears their return on average equity was 14.60%, which is a good sign of return to shareholders. If you are looking for hard numbers from this part, their auditor is Malden and Jenkins, LLC. This item contains all the financial tables I talked about. The management team, including the CEO and CFO, stated that the company's disclosure controls and procedures are effective in ensuring that all material information is properly recorded, processed, summarized, and reported. Larry Puckett is the chairman of the board, James Stubbs is the CEO, and Gerald Smith Jr. is the president. There are a number of other directors as well. Also, as of March 11, 2025, all members of the board are deemed independent except for Stubbs and Smith, who are both executive officers. River emphasizes performance-based pay for their executives, including salary, stock awards, and bonuses tied to the company's financial goals. In 2024, they paid Malden and Jenkins, LLC, around $219,000 for audit fees. That is a jump from 2023, where they paid $201,067. Overall, River Financial paints a picture of steady growth. It looks like the steps they are taking to fix problems with the Bank Secrecy Act should be effective and that they are on a good path. All those steps for the Bank Secrecy Act seems like a big action item for them at this time. It also appears they are planning on continuing to acquire and expand in their current business regions. In the end, what do I think about River Financial? They're in a pretty good position. If interest rates go down, it could affect revenue streams. I would also watch their commercial real estate loans because they might be negatively affected depending on the economic conditions. All things considered, they look like a pretty good community bank. Thanks for watching. If you found this deep dive helpful, give us a like, leave a comment, and definitely subscribe for more corporate decoding.